Good morning, good morning. Mini Cooper's face has just lit up because he sees what I've got on my screen already. We're going straight to it. What is going on here, son? What is going on?
Why have you brought it up literally 10 seconds before we go on camera? I'm not very happy with my colleague Sam.
Guys, zoom in on that, please. I can't do it from this side. You zoom in on that little baby. What is going on there, my friend?
So I was on the late shift with my colleague Sam last night, and there's a deal at 7:30 where you get half price sushi from Itsu.
Really?
So I went to get it from me and my Sam. I kindly offered to go out and get it for Sam as well. And unfortunately, it looks like he snaked me out. Because sent you a photo.
Can we?
I can't use chopsticks, by the way. I can't use chopsticks.
So, but is sushi a normal meal of yours?
No. So it was the first time I had it in a very long time.
Right.
And I had it.
Did you enjoy it?
No.
Okay, we can cut off that.
I like the salmon though.
The smoked salmon.
Well, apparently, I later found out it wasn't the smoke from Sam, even though it tastes like smoked salmon I'd have with smoked salmon. My granny, when I was young, used to be smoked salmon and cream cheese sandwiches.
Oh, nice.
Sort of thing. So it reminded me of that. But then Sam later told me, yeah, it's raw salmon.
But you didn't fancy the rice, did you? You weren't a fan of the rice.
So I went home and I worked from 12 till 8 last night. And that morning I cooked a spaghetti bolognese. So I had that.
When you got home?
Yeah, correct.
Nice.
Yeah, so that was good, healthy.
So you literally just took the salmon off the sushi rice.
Yeah, just ate the salmon.
So you can actually buy just the fish in future.
From Itsu?
Sashimi.
From Itsu?
From Itsu, yeah.
I didn't know that, because sometimes I just get like a pack of smoked salmon and eat that as well.
And you didn't like the little seeds, did you?
No, because basically in the Itsu box they had normal sushi and then sushi with seeds round. And the sushi with seeds round reminds me of, like, you know, that granary bread, which you would like, I got full sweet sort of when I was young, instead of the normal. Yeah, but instead of the normal, you know everything. Instead of the normal white bread, you see. And that's just the way I thought about it.
Mate, it makes perfect logical sense. Sushi isn't for everybody. Good morning, everybody. It is the 15th of April. It's Tuesday. It's a 4-day week. For me, it's a 3-day week. And we're getting there. We look like we might even get through this week. Dare I say it? What's our game of the morning, Minnie?
So we've got a number of things coming out this morning. I've got all my notes here.
But what's our game? Our game is not to mention.
Well, I can't say his name, but let's say the orange man.
The big
orange man.
We are going to see. You guys test us, right? It's now 7:33. How long can we go without saying his name? Let's go to the coming up slide, see what we've got for today's show. You've got myself and Mini Cooper all the way through till 8:30. We're going to be doing fast markets. And then myself and Matt Arbour are going to take you through live from the trading desk. Emma Binns join us again with 2 N's in her name, Producer Phil. Producer Phil taking the bins out. We're doing market measures, and then we got a special at 9:30. It is Emma's net zero price tag. So it's the first time she's been a guest on the show. Now she's a co-presenter, and she's going to be talking about the hidden cost of net zero.
Oh, okay. And I wonder what that was at the start.
Do you know net zero?
Net zero, when I think like energy, like carbon emissions.
Exactly. Yeah. So we're going to be looking at the hidden costs, and we've got a hope.
If we've got a hope
of getting there.
Is that an indication we have no hope?
Stick around and find out, Mini Cooper. Right. What? So what's happened? Well, first of all, you had a bit of an interesting weekend, didn't you?
Oh yes. So for premium clients here at IG, we host events. So on Sunday, I went to Lord's. It was myself and 3 other colleagues from IG.
Is that your first time at Lord's?
No. So I've watched matches there, and then we had the Lord's Christmas dinner there as well. But there was around 100 clients and guests overall, and basically Freddie Flintoff came in to give a talk just about his life.
Legend he is.
Yeah, very nice guy. Very nice guy.
Yeah.
Very humble. Everyone enjoyed it. He took loads of questions from the clients at the end. Spent around literally 20 minutes asking questions.
And that was after an hour of giving the presentation,
Correct.
right? Or like an interview kind of thing.
Yeah. And then he signed like merchandise, which everyone had, because everyone got given like a little mini cricket bat as part of their experience as such. Photos, everything. So
Bring it into the office for us.
sorry,
Did you bring the cricket bat in for us to play with?
I am not a client, so I didn't get a little cricket bat, unfortunately.
You didn't get a little cricket bat?
No.
Right, Amanda in the events team. I've seen Amanda's got 2 cricket bats sitting on her desk. I think they could be one for me, one for you. So that was with Freddie, but that sounds like a real,
That was really good.
a proper premium client event.
Yeah,
that is.
really good. And then on Saturday, I went to Bar Market and got a paella, seafood paella. Very nice.
But you like the rice and paella?
Oh yeah, I love paella. Really good.
Okay.
It's not raw, is it? No, it's like cooked. It's cooked.
Yeah, that's very true.
Yeah, like so it's completely different.
Yeah. I mean, I think the rice and sushi is cooked as well.
I'm very sure it was raw.
It is cold, but it's not raw rice.
I don't know. Let's stop talking about sushi.
You
anyway.
are a legend. Right, yeah, exactly. Let's get on to the important stuff of overnight news, shall we?
Let's go.
Overnight action coming up. I'm just waiting. Good morning to my sister and mum. I know I'm going to get the text. Oh, you were bullying him this morning on air.
Who was it you said was thinking about buying a Mini Cooper or should have got a Mini Cooper?
That was my mother. My
mum?
mother has just bought a new car at the age of...
Do you want to say?
No.
Don't say then.
No.
Have manners.
Exactly. She has just bought a new car, but she did come through to me and go, oh, maybe I should have bought a Mini Cooper because he's such a nice lad.
Oh, shout out to Rich's mum. Thank you very much.
Goodness only knows what she would have bought if she thought Ronnie. Volvo, I guess. So, yeah, what have we seen since we were last on air then?
Yeah, so last on air on Friday. Now, I went on Bloomberg this morning and I've got a screenshot of a few of the articles on there. So I remember, I can't say his name. Relatively
good session yesterday. The important thing for us all is that volatility has been absolutely crushed. We're now trading 25.5 from a peak of around 32 when you were last in.
Yeah, so yesterday I was working, as I said before, 12 till 8. When I got on, US indices, as well as the DAX and the FTSE, they were performing quite well, and they pulled off a bit. That was yesterday. But yesterday, Trump, I said his name.
Boom.
Oh,
8 minutes.
If the cameras can see it, it says it in the article there, Donald Trump. I was meant to
You've done it again.
I was meant to say the orange man.
We need a...
So, article which was out last night on Bloomberg. The orange man said he's exploring possible temporary exemptions to his tariffs on imported vehicles and parts to give auto companies more time to set up US manufacturing. The quote he said was, "I'm looking at something to help car companies with it," Trump told reporters Monday in the Oval Office. "They're switching to parts that were made in Canada, Mexico and other places. They need a little bit of time because they're going to make them here."
And
interesting.
The German auto is looking up between 3 and 4% on that. So Volkswagen, BMW really getting help from the back of that, as did Nissan overnight. Yeah. Nissan were up 4% as well.
I think they need more than just a little time, because you've got the actual cars being imported, but in addition to that, you've actually got the parts as well. Now, to actually move a factory from, let's say, Tesla have loads of factories abroad, to actually move it to the US, there's a big time lag. A little bit of time, I wouldn't say is enough.
It just gives you a chance to move your supply chains around.
Exactly.
But it also gives Trump a little bit of time and a little bit of pressure off the bond market, because bonds had a nice rally yesterday. So we'll have a look at a graph of the the 10-year, which is of course the one that we're all watching. And there was a couple of negative headlines yesterday as well, so it was tested, but pretty much all day long, you can see this is where we closed on Friday, down at 109.60, and we are a full 100 basis points higher at 110.70. So that, really takes the pressure off things, yields lower, and this is where a lot of the concerns have been. So,
and Trump also.
Shall we have a look at the S&P 500 as well? How that followed everything up?
Let's have a look. And I just said Trump. I just said his name again. Can we stop playing this game?
No. Right. So Luke Moore, great shout from Luke Moore, said it was going to sell off on the open, and sell off it did. So let's just find the 230 mark for you there. I'm guessing it was, let's see, Tuesday. So here we go. Right. It's all the way back here. So 2:30 in the afternoon, we were trading at 54.50, right? 5,450 all the way up here. We had an initial sell-off, and then we had a bigger sell-off at going into the European close. And you can see, this was the moment everybody was thinking. All those guys sitting in Canary Wharf, hedging their books, taking profits, is this going to be a sell-off all day like we got the week previous? And you can see in the old, always look around 5 p.m., 5:15. That's when the derivative guys have sorted out their book and they do their final hedging before they get up and walk out the door.
Oh, okay.
This was the final hedge right there at 5:10, and then the Americans come in, realize they've duped all the Europeans into selling, and they buy it over the rest of the evening, right up to 9 p.m.
Out of interest, Rich, I remember when we did the show on Friday, on the S&P, it was 58% long positions, therefore 40% short. Should we have a guess again?
Too late. What would you have guessed?
I think I would have guessed 58% again.
Touché. That gets me back. It's been an interesting week.
Yeah,
it's been an interesting week. Right, do we have any economics today? That's the question. Yes, we've had some UK data, some quite interesting UK data actually. So let's have a look at the calendar to see what we've had and what is coming up. There it was, UK unemployment 4.4%. That was. Well, it's always a little bit of a relief, isn't it, when it comes in line? But we also had average earnings increased 5.6%. It could potentially have been higher. It could have been 5.7. And if we take Mini Cooper's bonus out of it, then it was 5.9%. That is actually an official number there. If we can just quickly flip to the screen. 5.9% of average hourly earnings. And there it is. You can also see the payrolls change down 78,000 and claimant count as well. So UK data, half decent. And then back to the employment calendar for the rest of the day. We've got Canadian inflation, we've got US export and import prices. That's very much of a tier 3 kind of day, right? That was just producer Phil filling up the slide with those as much as possible. So
I was going to say, I think, recently with Trump just posting whatever he wants on Twitter or making these random... I thought we were going to stop playing that. Making these random announcements.
Yeah.
Then that is having much more of an impact on the market than macro announcements, because the main thing before would be NFPs, it would be CPI. They would be things which would move the market the most. But now, with Trump just coming out basically whenever and saying whatever, random, that is what's actually going to move the market now. So it's completely, the market dynamics are completely changed from when he was in, which was November the 5th. It's just all changed since then.
I saw a great meme yesterday about the White House Wheel of Fortune, and he's just got a big wheel, and he just spins it to see, right, 20% on China, tariff relief on semis, But yeah, very good one yesterday. Right, before we go into the numbers that Mini Cooper's done a lot of work going through, let's have a look at your upgrades, downgrades this morning. There's a couple of interesting ones, and it is primarily Next up to a £140 target. That's 14,000 of your pennies. A £14 target at Goldman Sachs raised to buy. All right, that is an interesting one there. Puma raised to buy at Berenberg. Big shout. Puma's been absolutely murdered. And then good old Atlas Copco, the mining equipment and engineering firm, cut to neutral, and Nestle cut to neutral. Keep seeing Nestle cut. That's about the third cut we've seen in a couple of weeks.
Third cut in a couple of weeks.
Yeah. Right now, young Padawan, what numbers have you been researching for us? What have we got to look at?
Young Padawan. Cool. Let's start with what's coming out today. So we have got Bank of America and Citigroup. So Bank of America, I checked on Bloomy this morning, indication that the results were coming out at 11:45 this morning, that is.
Yep.
Markets expect the Bank of America to deliver a year-over-year decline in earnings on higher revenues when they report later today. They're expected to post quarterly earnings of 81 cents per share, representing year-over-year change of minus 2.4%. Revenue, however, is expected to be $26.74 billion US dollars, up 3.6% from the year-ago quarter.
It's quite low growth, isn't it?
And then Citigroup on Bloomberg, the indication is that they'll report at 1 p.m. this afternoon, so an hour and a half before US Open. With respect to numbers, Citigroup predict revenue growth of 3% to 4% for the full year of 2025, and they're expected to post quarterly earnings per share of $1.84, and revenue is expected to be $21.14 billion for the quarter. In addition to that, just good to say how Goldman reported yesterday at 12:25. If you could bring up their price chart, we'll see at 12:25 how the price.
And then we'll also see at 2 p.m. when the conference call happened, because it didn't like the conference call so much, which is could well be a canary in the coal mine for the whole earnings season.
Yeah, exactly. Net revenue was $15.06 billion for the quarter, whereas the estimate was $14.76 billion, so they exceeded on that. But one point to note was that equity sales and trading revenue was significantly better than expected. So that was $4.19 billion US dollars instead of the $3.8 billion US dollars.
It's a decent beat, isn't it, in equities, yeah.
And it's also good to note how Goldman is all sessions. So even though they reported before the US Open at 2:30, if you wish to, you can still get in or out of positions via the platform.
Great. David Solomon giving a very stark reality of what could happen with tariffs. So this was the conference call, but the stock steadied up, as did the market. And we have a quick look at Goldman's on the daily chart. Where are we? Well, that's where we were. We were up at 670 on the 20th of February, when the world was a wonderful place. And wow, have we fallen. 670 down to 500 trading now, but it did see as low as 417. Woof.
It's like we said on Friday, along with the other banks, they would lose out due to the fact that there's going to be less M&A. Because I said before how Klarna, as an example, delayed their IPO, given this economic environment and the tariffs which the Orange Man is implementing.
Well done.
A lot of firms aren't going to want to go public at the moment, because it's like a valuation. Let's say as an example, I don't have an example off the top of my head, but if a company IPO'd in the US, let's say 3 months ago, it's likely that their share price would have gone significantly down, reducing the valuation of the company.
Is there any?
I don't know off the top of my head.
CoreWeave was recent. CoreWeave, what a time to
it's just not a great time.
CoreWeave, there we go, 43. So this one came right in the eye of the storm, didn't it? Let's have a look at the hourly there. Is that where?
And how recent was this IPO, sorry?
This was on the 28th of March.
28th of March.
So,
Fairly recent.
you know, at least they got it away. That's one good thing. But you could see, you know, it had popped up as high as 60. So this, I believe, is one of. It's got something to do with Nvidia now. Is it?
Okay.
Is it a client or a supplier? Supplier must be.
I'm not sure.
Well, I'll get that during fast markets. I'll firm that up. But if you consider that, you know, hopes had built after the initial move, and we saw this above 50, quite interesting to see it at 43 now. But yeah, the important things are where the futures are sitting this morning. So after all that, where are we sitting on US indices? Well, the S&P 500 trading 5,405. So we had a nice little win on selling that strangle yesterday. Remember, we sold the 5,300 and the 5,475 puts and calls. Took in some premium there. So had a nice little play of the day. Don't think I'm going to have a go at it today because that's a decent Monday and Tuesday. So I think I'll sit back today and let the market do its thing. Although, as you can see, volatility continues to come off. There it is, 25.5, down another further percent. We got FTSE strong like bull, 8,150. So that's at FTSE remains at the highs where it touched yesterday, whereas the S&P 500 is almost 1% lower than where it peaked yesterday. So that is an interesting thing to watch there. We've talked about the 10-year already. We've talked about vol oil, 61.50. Yeah, it's all right.
Yeah, it just seems this morning there's significantly less volatility than what there has been the past few weeks. Yeah. It'll be interesting to see if it does carry on for the rest of the week, well, up until Thursday as such, as Friday's a bank holiday.
Absolutely. He does not want to rile markets before a long weekend. No. Right, where we got Bitcoin, 85,400. Must say it's been relatively steady. It's only traded in a 10% range.
Yeah, Bitcoin's has been pretty steady recently, because I remember when Trump did actually get in literally the night before, so it had been November the 4th, Bitcoin was around 66,000 USD.
Yeah.
But ever since he got in, it got up to around, I want to say 104, 105. Mm-hmm. And now it's back down to just over $85,000, as you can see there.
Yeah. So yeah, for those FX traders of you, we got cable at 132, and we've got euro dollar is now 113.40, right at the bottom of the page there. 113.43 on euro dollar. The yen given back a little bit of its gains, 143.30. That's one to watch there. But yeah, steady as she goes. So we are going to take a quick 2-minute break. I shall leave you with, does this apply to the UK, do you think, Minnie? The inherent vice of capitalism is the unequal sharing of blessings.
Unequal sharing of blessings?
That's capitalism. The inherent virtue of socialism is the equal sharing of miseries. We'll leave you that one. We'll see you in 2.
From the 2nd of April, watch Trade Live with IG weekdays from 7:30 to 10:30 a.m. on our brand new YouTube channel at Trade Live IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and your usual favorites, Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome back, everybody, and welcome to all you online monkey man wing it. Wing it, saying morning all mature and hola chicos. ¿Cómo estás, maturin? How is Valencia this morning? Funky Gibbon. David Boyce, you've had a fun night last night, haven't you? Monkey man, I always read your tagline, morning you apes, and think, is he being ironic because monkeys technically aren't apes? Maybe you're overthinking it. Boycey. Is that it? Is that your chat for the morning? Come on, son. Give us something. Tell us what you think of the market. And maturing, questioning your sushi with a knife and fork. Asking what other habits you've got.
I can't use chopsticks. I don't know if I mentioned that.
Yeah, but just nobody's taught you, that's all. It's Pete Ward's job to take you under his big fat wing and help you out by teaching you things like that.
Teach me how to use chopsticks?
Yeah. This is you're out with clients in Nobu. You don't want to be eating with a fork and knife. Having said that, I was once on a date in Nobu, Berkeley. And she brought her two friends along as well.
What, to the date?
To the date. It was a first date. It was an expensive one. Anyway, we ordered sake. Do you know what sake is?
Some sort of sushi?
Japanese wine.
Okay. Oh, right. I was very wrong.
Okay. But you can shot it. So the waitress poured us 4 sakes and we cheers and shot it.
Yeah.
So anyway, 5 minutes later, let's have another drink. Let's have another drink.
Yeah.
I'm trying to calm my nerves, So I pour, without even looking, I pour 4 shots, lift them and cheers and down it, and it's soy sauce.
Oh my God.
The thing of sake and the thing of soy sauce looked identical, and I'd taken the wrong one and poured it in.
Did the waiter or waitress not tell you what was what?
No, because that was me being the
okay.
the alpha male of the table and pouring our own drinks. Yeah.
Well, it was lucky that didn't happen to one of the ladies and you told them the wrong way round.
Yeah. Well,
you'd have been in big trouble.
Luckily, the girl I was on a date with, Alexandra Bailey, good morning to you, over still good friends. She's now married with 2 children over in New Zealand. Her 2 friends noticed, she didn't, and the 2 friends just looked at me and kind of said, we'll keep that a secret between us.
No.
Yeah. Right, anyway, my old stories, good old Nobu Berkeley back in the day. Poppy, I bet you were a fan of Nobu Berkeley, weren't you? Saying market's taking a breather after last week. That's right, just headline watching. Poppy, our bond expert, saying the bond game is not over yet. New auctions tomorrow and Thursday as well as next week. Never far from more issuance. Looking for higher yields at a screen near you. Oh, thanks for that. Cheers, Poppy. Keeping us up with the bond auctions. That's definitely going to be something to keep our eyes on. And Monkey Man hearing a story, people in Asia selling gold and moving it into Bitcoin.
Interesting.
Is there a way of checking that? Well, with the blockchain, there should be, shouldn't there? See if there's a big intake. Right, we're ready. It's the London Stock Exchange grand opening on the 15th of April, and Mini Cooper's about to do it. FTSE looking up, a nice little open. The stocks are taking their time. British American Tobacco even up 50 basis points. £31.71. British American Tobacco is certainly fully valued at this moment. I don't have any. I used to have it as a nice little yield giver. Lloyd's, nice, back to 69 pence. Big
Up
fan, Mini.
0.56%. And then we've got Tesco up 0.51%. A big fan of Tesco. Of course, I used to work for them for a year.
And where you get your top from?
BP is up 0.91%.
Go on, get up there, BP. Come on, save me. Right, should we refresh and see if we get any... Oh, losers. Why is Burberry down 2.2?
You've got Vodafone down 0.35%. I thought that would have jumped out at you, Rich. I know how much you love them.
Solid day yesterday, though. Solid day, nice recovery. And I'm short the 66 penny puts, so that's not the end of the world. Here they go. Those crickets come out every morning about the same time.
We've got... Oh, NatWest is now up, but HSBC is down 0.23%, whereas Lloyd's was slightly up on the open.
Right, we are hearing that Halfords are having a good morning. So let's go across to our UK retail. Where have I put it? UK retail is here. And we are seeing Halfords up 9%.
Wow.
That is new recent highs. What have we got out in the news? It was numbers. There we go. So, expecting to mitigate the entirety of the direct inflationary impact. No direct exposure, right? That's where Halfords is in the bucket of no direct exposure. Of course it is. Profit expected to be top of the range. What a turnaround in this business. Well done to the management team of Halfords. Like-for-like sales up 2.3 versus strong prior year comps. So Halfords has been one of the stocks of the year. Look at this on the daily, and you'll see if we go back far enough, this thing down at, what am I saying? Oh, I'm getting mixed up with Currys. What an idiot. Take that all back. I was thinking Currys is at £1, and I was getting mixed up between Currys. That is terrible, McDonald's. Shocking. Right, moving swiftly on. What else we got next up on that upgrade? So upgrade from the mighty Goldman Sachs.
1.58% as of now.
What else are you seeing there, Minnie?
We've got Ocado up 1.52%. We've also got JD up 1.2%. GSK up 0.95%. Still got Lloyd's up, and Lloyd's is up 1.13% at the moment.
Nothing racing away, though, is it?
No.
We got a very... It seems like people are almost exhausted from the last couple of weeks. No, there's a lot of tracking of the index going on here. A lot of tracking. But, why are we seeing... Oh, no, Burberry's still down?
Burberry was down on the open. I don't know where it is now.
Where's my Burberry gone? There it is. Down 3.7 now.
Was there news on that?
Let's just see. I haven't seen anything.
Doesn't look like it, no.
Okay. Maybe that's not a Burberry top, is it? If people seen you wearing it and decided to slam the stock.
This is from Reese.
Of course it is.
Where's your stock from?
This is from a company called Jam Industries.
Jam Industries?
Which...
sounds like a DJ thing.
Well, he probably tried DJing at one point. So it's a good friend of mine that used to be on Made in Chelsea. Okay. And he's now started his own clothing line. They've got a beautiful little shop on King's Road. And Andy, big shout out to you, Andy. Good job, sir. Well, good job, well done. But I have got a t-shirt under this morning. It's a little bit warm with all the lights in here. It's clearly a luxury sell-off. We got LVMH down 6%. Kering down.
Yeah, there was news on
it's
LVMH
LVMH
yesterday.
numbers, of course.
There was news on that yesterday. I think it came out in the afternoon. I don't have them here, but for the viewers out there, what do they look like?
Down 3% in sales. So LVMH down 3% on the sales line. That was underestimates, and a little bit of a tough response there, down 6. Just no let up for these things, are there? I'm getting to the stage where I would be selling puts in LVMH with this elevated volatility, right? And looking around maybe the 4, I'm not talking about being brave and selling them at 470. I'm talking about, 420.
Yeah.
Something like that. So down 1 standard deviation move in LVMH. But, what's the low? The low of this stock on the daily, we're pretty much almost there. Is that as low as it's been for this whole move? Yes, it is. Tell you what,
Wow.
it never lets up. I think I've said that I'm interested in this thing at 600, at 550, and now I'm saying it again at 500. I've been lucky to not touch it.
I think if there is a global recession, stocks such as Louis Vuitton will really struggle, even though, from my understanding, they do have a very loyal client base. Same with Hermes. Because Hermes was slightly down.
But this thing was at 700 on March the 3rd.
Yeah.
6 weeks ago, it's gone from 700 down to 500. You're absolutely spot on. A global recession, especially when he's targeting the wealth, right? There's this sort of increased feeling and expectation that Besant has said this is not the time for Wall Street. This is the time for Main Street. After the passage of growth, hence the quote of the day today, right? Now, by no means am I saying that America's going into socialism, especially the Republican Party, but it's certainly talking about the 90% rather than the 10%.
Yeah. I also think of it that Trump wants, as an example, the chips, the smartphones. He wants a lot more. The Orange Man wants a lot more of that in the US rather than China. And my personal opinion on it is that China could potentially invade Taiwan in the near future. And if that ever was to happen, then of course Trump wouldn't want large-scale production of the very, very large US firms, such as even Tesla, as Apple in China, which I think personally is part of the reason why he wants, even though it's going to cause inflation.
Yeah.
And it's pissed off a lot of people that it's wants to move over to the US. Sorry?
Larry?
Larry. I'm not Larry.
Pee off. So, yeah, I mean, look, we don't think there's going to be boots on the ground, do we? It could be some kind of movement towards the...
Yeah.
Yeah.
Because there's always conflict around that region with respect to that.
Yeah, no, that would certainly be it.
Yeah, that would really sink
set 2025 off. Yeah, but yeah, definitely not in the near future. There's nothing on the off. Right, I don't really know how I feel about this market now. What do you guys at home think? Let's hear from the people. Carlo, Rich, you once talked about the series Industry. He watched the last episode yesterday, and isn't it just bloody brilliant?
The Industry, which one?
Yeah, which series? Was that the third series, Carlo, that you watched? Because if you're like Mini Cooper's age, right? How old are you, 24?
25.
25?
25.
Right in the mixer, right? I mean, Industry, the next series could be on this guy's life, right? Imagine sitting down at BBC with your girlfriend, arm, and watching this man trying to eat sushi with fork and knife.
Would you be on there as well?
In the middle of a trading floor. Yeah, with me down in sake bombs of
Soy sauce.
soy sauce.
No, industry is really, really, really good. Love
Strong,
it.
isn't it?
Oh yeah,
Yeah.
really funny.
Yeah. Have you seen Layer Cake?
Layer cake.
Yeah.
I haven't.
So it's with Daniel Craig before he was James Bond.
Yeah.
And the stunning blonde actress,
her name?
British actress, married to Jude Law. She was for a while.
Come back to you soon.
Come on.
Come
on, producer. Sienna Miller. So Daniel Craig gets with Sienna Miller, but Sienna Miller's boyfriend then comes and stabs him at the end.
Is this all like, is Layer Cake like finance? Is it all like...
No, it's Layer Cake's like Lock, Stock and Two Smoking Barrels.
Excuse me? Lock, Stock and Two Smoking Barrels?
Mate, you're 25, you're not 15. Have you not seen Lock, Stock and Two Smoking Barrels?
I've not heard of it, let alone seen.
Mate, these are classic British films. Forget your American
If I had a
trash.
pen, I'd write this down.
We are in a world of tariffs, my friend. You've got to buy British, right? The Financial Times this morning talking about buying British. You've got to watch some
I guess they
proper
pay a
British
good
heritage.
I guess they pay a good dividend.
They do pay a good dividend, but
Sorry, was that you or was that someone in the studio?
I didn't do anything.
8 votes. What's the verdict so far?
Well, I don't.
I'm assuming
let
no.
Let me see. Yes. Anyway, sorry. My point of divergence is in Layer Cake, Sienna Miller's boyfriend, as lucky as he was, he did lose her to Daniel Craig. You remind me so much of Sienna Miller's boyfriend. That is, forget Gary Stevenson. You are.
What have I ever done to you?
Mate, it could be a good thing. Could be a
I
good
haven't
thing.
seen it. I just assumed it was a bad thing.
Waka Waka saying, holy moly, how on earth has he not seen? This is your next weekend. You are going to love it, my friend. Lock, Stock, Two Smoking Barrels. And there's a few of them as well.
Also, I love the name Waka Waka.
Boise asking, does your mum still cut the crust off your sandwiches in the morning?
I don't live with my mum.
Right. Yeah, Billions takes some beating as well. Billions, even better, right? That was, when I was in the old hedge fund world, I recognise some of those stories, I've got to admit. Of course, it was based upon Steve Cohen, and allegedly, and the before we get shut down, and SAC, right? But Billions written by the CNBC presenter Andrew Ross Sorkin. So those are a lot of stories that really happened during the financial crisis and afterwards as well. So yes, some great interesting.
Poor lad, lol.
It's because I'm bullying you.
Right, let's start talking about markets. Right, we've got Johnson & Johnson.
Well, I tell you what. Yeah, let's go for a quick break. Wag, Poppy, you like Wag? My goodness, come on. Guy Ritchie is the director of those movies there. Right, we're going to a quick break. We'll be back with Fast Markets. Get your comments in on what stocks you'd like us to look at. Mini Cooper's got lined up Johnson & Johnson and
Intel.
We're going to be chatting about those after the break. We're going to be chatting a little bit more markets. And then we've got Matt Arbour coming in as well. See you in 2 minutes.
From the 2nd of April, watch Trade Live with IG weekdays from 7:30 to 10:30 a.m. on our brand new YouTube channel at Trade Live IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and your usual favourites, Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Right, I was out for a run stroke walk last night, and I saw a notification pop up on my phone. Free guaranteed stop losses.
Correct. So we are offering this up until the 30th of April.
Right.
And what it was is prior, if you use a guarantee stop and it's actually hit, then you are charged. Now, you can see the charge in the deal ticket at the bottom before you place a trade.
Okay,
view full costs and details.
Let's get this up and show. So I think I'm very happy with the market having rallied so much. So I'm going to put a little 1 point short on, £1 a point on the NASDAQ.
Yeah.
I then go to stop and I go to guarantee. Now I don't want him to, the big buffoon, to come out with a headline and this market to tear up 3% without me getting stopped out. So, yeah, I'll put on a 35 point stop.
Correct. So you can do a minimum of 10 points away. Now, before and during this initiative, if you use if you set a guarantee stop loss and it's not hit, you wouldn't be charged. Whereas before, let's say you did it 2 weeks ago and it was hit, then you would be charged. But now up until the 30th of April, if you use a guarantee stop loss and that level is hit, then there is no charge at all.
That's brilliant. So to me, this looks like IG are kind of saying, right, we realize that all the clients have had a tricky couple of weeks.
Yeah.
We're offering you an increased opportunity of risk management.
Correct, because the guarantee stop doesn't actually exist in the market. It's just something which we offer to clients. Now, we wouldn't offer it on all markets. As an example, if you've got a pharma stock with really high IVs, or really high implied volatility, then we wouldn't offer it on that, of course. But let's say if you're trading one of the indices which aren't as volatile compared to a single equity fund or a mining stock or something like that.
Anything with gap risk overnight.
Exactly.
Anything with gap risk overnight, get a guaranteed stop loss on. Take advantage of what they're offering you here.
You'd be able to do that on literally all the indices. Because you're not going to see like a 30% move in the FTSE overnight, whereas you put in a single equity.
If you think that China's going to invade Taiwan, mate, there's going to be.
No, I think that.
I'm joking. I'm joking. I'm just using that. But yeah, definitely. There is no reason
not to use it.
Yeah,
exactly.
Right, and this is good because it teaches you better risk management. It teaches you, that on how to use a guaranteed stop.
And a normal stop loss isn't a guaranteed one. So a normal stop loss is subject to slippage. Well, slippage is basically the difference between where you set your stop and where it was actually executed, because we can't always necessarily fill you at your price if it never traded there. This is commonly seen in like NFPs and CPI, but maybe more so now with Trump's announcements. I said it again, the orange man's random announcements.
Now, take us, Monkey Man saying, well, he's going to force you to talk about DJT Media as a stock in fast markets. Let's have a quick look at Intel.
Yep, Intel. It's a bit of news on Intel yesterday. So Intel entered a definitive agreement to sell 51% of its Altera business to Silver Lake at an $8.75 billion valuation. Intel will still own the remaining 49% of the Altera business. Share price was up very slightly when this was announced 1:30 yesterday as a result. But not too much movement, I guess.
Okay. Yeah, I guess Intel's still the noise in the background about potential Broadcom, Qualcomm.
Yeah.
So, that's interesting. Obviously, it's come down with everything.
Down 60% in 2024.
And then more recently, we've seen it as high as 25? Yeah, $26. 20th of March, we were at 25.75. So yeah, worth keeping an eye on there. And Johnson & Johnson.
Yeah, you've got Johnson & Johnson.
On to Specsavers.
Now, Johnson & Johnson are reporting earnings today at 11:45. That's the indication on Bloomberg. Got a screenshot from Bloomberg on this. Let me just get that for you. This is just with respect to Johnson & Johnson's diversification.
Contact lenses, baby oil.
What strengthens J&J's defensive capabilities is the company's diversification within the medical sector. J&J provide a wide range of pharmaceuticals across several therapeutic areas, including oncology, immunology, and neuroscience, among others. Another point to note on Johnson & Johnson is the company have a very good balance sheet. So they are rated AAA. So very, very safe debt.
Famous last words before a profit warning. But a 9 on the outperform and 15 ratings there. Let's see the average price target 168 and it's currently 152-ish, is it? Yeah, it's about that. So yeah, very boring, right?
Yeah.
Very boring.
Yeah, I mean,
the biggest bull gives it 18%.
Yeah.
Danielle across it at UBS giving it an 18% upside. But look, this thing, maybe it's somewhere to hide in these recent times.
Yeah.
I'm not going to stop wearing contact lenses because there's a big orange man throwing around threats. Okay.
Just out of interest there, next to tip ranks, you can see fundamentals.
Mm-hmm.
So you can see market cap, price to earnings ratio, earnings per share 12-month trailing, dividend yield, 3.213%, which isn't bad for a US stock. It just shows you how big Johnson & Johnson actually are. Like $371 billion market cap is very, very big.
Right, moving on to legal and their general 242. Yes, that's right. Neil, away from the numbers, talking about why is that big spike up in there? Look at the way that this thing's recovered. That is a strong recovery. Thank you. Buyback. We saw a worry about the gilts, of course, about the corporate bonds also they've got on their balance sheet. However, this thing trading back to 242, that is an impressive reaction to tariff world, isn't it? Well done, legal in general. Happy with that one?
I'm very happy with that one. What's just out of interest on like a wider scale? Let's say if you go back, like you can do like a 2-year on the price chart. What does the share price of legal in general look like?
Probably nothing, I would imagine.
Nothing.
Yeah, that's where you get your nice juicy 7% dividend.
I was looking at Johnson & Johnson. It looked fairly similar, just up, down, up, down.
Yeah.
Yeah, but nothing, no such real movement for Johnson & Johnson even in the past 5 years.
I think Steve Davies bought his first ever call position yesterday. Top of the market, my friends. US 500, 5625. Reason for doing so, we have, in Steve's very humble opinion, tariffs extension and US results season expecting to be reasonable. So a June 5625, what did you pay for that, Steve? How many ticks did that cost you? That's 5625, interesting, for June.
Quite bullish.
It's bullish.
We'll see. Yeah, we'll see.
Would you make it a call spread? So remember, buying 5625, but maybe selling at 5,800, 5,850, just to reduce the cost of that before. Blake 7, legal and general dividend due next Thursday. That is correct. Selling just before. My options expire on Friday. So I wanted to get that option expiry before they go ex-dividend. Sorry, Thursday, of course, because it's Easter.
Oh, yeah.
So options expiry.
Yeah.
This Thursday. Now, Monkey Man, thank you for your email last night. Monkey Man reminding us, please tell everybody when Easter trading hours are.
Okay. So the client should be getting an email about that soon.
I would imagine it would be today, wouldn't
it?
Yeah. So we will report that tomorrow morning before I go off on my holidays.
Where are you going again?
Secret location.
Can you not say on air? Or you?
Where would you go?
Where would I go? Just on a holiday, like my next.
I'm off on Thursday.
Yeah.
Right. So you're going to have Beecham and Bright doing the morning show on Thursday, and then Esar and James Gordon.
Yeah.
Taking over. So, and I'm also off on Tuesday because Angeline's back. So Angeline's going to be doing the whole show on Tuesday. So I am off. I'm fly Wednesday night.
Yeah.
Thursday, Friday, Saturday, Sunday, Monday, Tuesday, fly back Tuesday afternoon to be in here Wednesday morning.
Very jealous.
Cannot wait. I am going on a paddle course.
No.
Not paddle. Paddle. Learn how to play paddle properly. What are you laughing at?
Sam and Phil can teach you from the office.
They are. But
They're very keen paddle
I'd
players.
rather poke myself in the eye. Right, we will be back. We've got, now, should people subscribe to the new YouTube? Should they give us a like?
A like and a comment. A like and a comment.
If you have loved Mini Cooper's stories this morning,
Or loved abusing me.
or loved giving him abuse in the chat, then give us a subscribe to this new @TradeLiveIG. Give us a like, give us a thumbs up, give Mini Cooper a big shout out, and we'll be back in about 4 minutes with Matt Arbour to tell us what on earth's going on in this market. Legend.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose. From the 2nd of April, Watch Trade Live with IG weekdays from 7:30 to 10:30 a.m. on our brand new YouTube channel at Trade Live IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and your usual favourites, Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, look, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal, and I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach, and I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There were too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Hi everybody, welcome back. So Matt Arbour in the seat here.
Morning, Rich. How are you?
Bit more relaxed.
Well, yeah, it's like again, I was saying yesterday, you come back to these markets, you disappeared, you're on Blue Origin for a week or something, and it's like nothing's happened.
That was quite something. Did you see the 11-minute trip to space yesterday?
I caught snippets. Good God!
And all the screaming as they came back in.
Well, yeah. It's striking some blows for I don't know. Let me go there.
Yeah. we'll the two of us will end up in space if we go down that route.
But yes, and then some interesting price action during the session yesterday when the strong opening on a Monday. Good to have a strong Monday, and then European close all looked a bit iffy, but
it tested people's nerve, didn't it?
Yeah. So a positive news story. Nothing else has come out, and yet a natural sell-off back. NAS was down at one point, wasn't it, going into 5 o'clock, and then sort of quite a decent bounce, which I think is encouraging.
The thing that I couldn't understand, I took a daily put. Luke Moore and I were chatting just before the US Open, and Luke went, people are going to take profits, aren't they? The first thing you do is that feeling of get out of jail free card. You've got Apple, you've got Nvidia, you just let some go. So we thought, right, market will come off a little. So I've just bought a daily put, but 1/3, like down at 53.35. And then about 5:30, 5:45, the automotive tariff story came out. And the S&P only bounced 10 points on it. I'm thinking, well, that's weird. Either I'm misreading it or I'm late
Well,
to
it's
it.
very hard at the moment to read these things as to where the market's going with some of the stories.
I'm thinking, but if he's starting to give automotives, a bit more, that's more positive than we were first thing this morning. So why are we at 5,385? And yeah, it's just people are exhausted, aren't they?
Well, I think they are, and it's interesting what you say about the taking profit, because that's, you know, you think lots of people, were they new into the market? Was it an average down? It's where do you forget about last week and say that was the wrong move? Here we are, we're rebuilding from a base, or was it, as you know, I'm adding to my structural position? These stocks were good stocks before, they're good stocks now. Am I just looking to take? Yeah, you make 10% whatever you've made, 15% on that bounce in the week, but was that just clawing back from averages from higher levels? I'm not sure there was that much new money into the market over last week, given you know, there doesn't seem to be that sort of profit taking on bounces, and we're not seeing that kind of action.
Yeah, it's been sorry, I'm just hearing about a move in John Wood that we were talking about. Yeah, John Wood down 11%. I think I've kind of missed something there this morning.
Well, there was a takeover story yesterday, wasn't there? That one's assuming that's falling apart. Are we? There's a chart for you. Wow.
That's the daily chart dropping from £2. I mean, I've never seen this stair steps.
Yeah.
What technical pattern is that, Matt?
I think stair steps is multiple cliff edges. It's like on those cartoons, you fall down once and then again, bang, bang, bang. But
from your years of experience, right? Let's forget, you know, about actual John Wood. When you see something like that, there's the guaranteed stop getting hit in the I put a £1 short just to test this new guaranteed stop thing. So that's the worst
like
£35 I've ever spent.
Nothing for free.
I'll go to Michael and try and get that back off him. But yeah, so John Wood, when companies come out with accounting issues, what kind of experiences have you had of that in your career?
Well, it's accounting issues. It depends. John Wood was interesting because it was that we never really got the accounting issue initially. It was their problems with the finance director, which can go various ways. I think Entain's the other one of recent times, which there was problems, I think, with the finance director, and there was nothing structural. It seemed the share price. We saw the volatility, but some good bouncing. You know, we go back many years. We go to Enron with, you know, the greatest financial.
And you were trading in those days.
Yeah, I was trading in those days.
What year was that?
God, Enron. Was that? I try to think in relation to a September the 11th. This was before, was it? Wasn't it? Yeah. So it was. It was post. No, I think it's something in the middle. I'd like to say Enron was post the tech exuberance, so early 2000s. I'm sure someone can give us the exact dates.
Yeah, I'm sure
these dates become very difficult, but yeah, which was the speed of the unravelling, I suppose, and Enron was different. You look at John Wood, that's been a sort of a slow accident. Might still get saved, although someone, you know, those people are still clinging on, looking for the, you know, that daily play on Wood Group, because it does bounce on all these takeover stories. There is some high stakes action still to be had there. But Enron unravelled really quite quickly once the strings.
Is that right? Like power stations or energy trading?
Energy. Well, Enron was energy trading and rigging markets in energy trading, basically.
Right.
A great film. One of those. Great, where they've got all the footage. I can't remember. Is it called? They made a play of it as well. Enron, the smartest guys in the room, is a great piece of TV to sit and watch. I don't know. You know, it's not been on for a while. People forget the story. Yeah. It's a great hour and a half of documentary of watching the recordings they have of the Enron traders asking for or getting power stations turned on and off, and it's wonderful stuff. But yeah. A different kind of unravelling, but yeah. As soon as there are problems with the numbers at companies, you want to be very wary, don't you? This idea that it's a short term blip. Accountancy problems generally mean naughty things are afoot.
Every fund manager I talk to, that is their red line. As soon as there's questions around accounts, the very first opportunity they can, they're out. and they question it later, and maybe they might buy back in, after a week, 2 weeks. But the very first, and so you don't normally see the first opening being the low in that respect.
Generally, yeah. And you get the edge of it. There have been various instances of auditors walking away, which, I'm trying to think that there was a recent one where the auditors walked away, wasn't there, in the UK? But I can't.
History?
Quite likely, yeah.
I don't want to.
But you're right. John Wood's an interesting one because it's twofold, because you can see where the structural story's unfolded there. Oil services out in the North Sea were a brilliant company 10 years ago. North Sea was booming, and I'm trying to think. I'd like to say the share price was about £6, but that might be wrong. Maybe I'm well over the top there. Yeah. But this was a strong company with good revenues, and the writing was on the wall. Where do you diversify? You can go out and service offshore wind. You've still got the helicopters, you've got the boats, etc. But it's a different sort of contract. So it's one of these. Are people, if you're in the company and you see your revenues disappear, do you start chasing things? I suppose that, in talking of accountancy like that, my favourite example of watching your returns disappear, and this, other people may have even traded with them in the past. Man Financial, who were the futures trading arm of Man Group. Long story, we're a sugar trading company, built it up into hedge fund management. They're still a very successful hedge fund management arm, and they spun out their futures trading division. And this was a company that before 2008, I think they were making $1 billion a year off client monies and sort of margin lending out to customers. They obviously didn't understand their own business model. It was a business model where you were paying phone brokers lots of money to support clients. As soon as rates collapsed into 2008, suddenly all their revenues started drying up. They hadn't worked out that actually they weren't making the money from commissions, they were making the money from the lending.
Right.
What did they do? And it was their stated strategy. To capture that yield, they went into European bonds into 2008. So they were hugely long European bonds to try and recapture the yields they were making, and the whole thing imploded. But it was just a sort of not really accountancy. Chief executives not understanding their own business, where it's
SVB, with treasuries as well,
the classic Warren Buffett, when the tide goes out, you catch you swimming naked. It was very much one of these things.
I wonder if 2nd of December 2001. Thank you, Frosty, for that. I was in Los Angeles. I just started at college at USC, and of course it was all in LA. Yes, that was in California where they were doing the stuff. Not guilty. I wasn't there. And then of course Barings Bank. Yeah, Daniel mentions Barings Banks as well. That would be too early for you.
That was too early.
Knight Securities. Do you remember that one?
I remember. Knight Securities was a brilliant story, wasn't it? There's the robots bringing down a company.
It was the kind of start of algos, I guess, wasn't it?
Yeah.
And was it just a fat finger on the end?
I think it was a piece of code kind of changed. So all the automated systems and messed up sizes, and anyhow went from a very successful sort of at the nub of HFT trading to boom in about a week. They were
that's tricky time, that one. But I wonder, in this kind of instance, right, it happens again and again and again. Madoff. Negative oil, right, on the guys in East London that did very well from it. There's continued SVB, Sam.
You need to breaking news this. Bankman-Fried.
Bankman-Fried, yeah. Is this going to bring up something?
Well, this is interesting. It hasn't really been long-lived enough, I think, to bring anything out. But we've seen the bounce. It's generally those longer downturns where you see things unraveling. Of course, what we all want to see is MicroStrategy unravel, but there we go. What's the trick here?
Do you know what? I haven't actually looked at MicroStrategy, but the vol must have. How's the vol been on that one?
Well, it's as high as ever, but it's bounced with everything else. This was kind of the one where, as everything was selling off, because crypto didn't really sell off last week. We held, we were down to about 75, but in crypto terms, those were small percentage moves when the whole market's winging around 10%. Yeah. And MicroStrategy, you kind of thought, okay, into a sell-off, is this where it unravels? With the buying convertibles, of course, I think the number where your convertibles go out the money is a much lower number than where we are. And again, people will know it's a known kind of number in the hundreds.
Well, I think the converts are there's some around that 220, 230 level. So, the buyers have clearly stepped in there.
But it's I suppose it's too obvious, but things where people have worries about is there something not right, into the more sustained bear market is where issues become.
A few people probably sweating last week though, weren't there?
Well, yeah, of course.
Whether companies or banks or
at about this time last week. Well, no, it wasn't. It was a bit later on Tuesday last week that it became uncomfortable.
Oof. Oh, that's right. That was the
seems 100 years ago now.
Yeah, all rolls into one. So that'll be interesting. The guidance for as companies come out with numbers, right? We've obviously Goldman's done well. Solomon did not particularly bullish on the call, understandably. We also had another company yesterday, can't remember, it was a Scandi company coming out and again saying, look, this is certainly providing headwinds for us in a business sense. What are you expecting from earnings season?
Well, I suppose it's interesting. Is the last quarter? Is it really affected? I suppose consumer sentiment was a bit down. Netflix is going to be interesting. So if you remember last quarter, they blew it out the park. That was it was a 10% up move and retention and new subscriber numbers like no one could quite believe. And on the move to the sort of semi-paid for model, obviously proving successful for them.
Yeah.
It'll be interesting. Does the market punish them if they don't repeat those kind of numbers, or are we just looking for stability here? It's that TV sort of pay for TV market has come back, sort of the existential threat to Netflix of Disney kind of seen off, that people were dip in and out of the Disney.
Apple TV very average.
Apple TV very average. Rubbish.
Yeah, exactly. Amazon. Don't think Amazon.
I'm going to go out there and say if anyone can stay awake during Severance on Apple TV, put me to sleep every episode. Couldn't finish it. Lots of people say this is great, but
I made it. Episode 3 or episode 4, and I was like, what are people on about?
I know. Yeah. It was it's one of these sort of, it's people just watching it to say they're watching it because they're thinking, well, I don't understand it, but maybe it sounds great.
Yeah, it could well be. And then, I think maybe if I had a broken leg or something and I was stuck on my sofa, I'd still, rather read a book.
But yeah, it's interesting. Netflix at the start. How does the market react? We saw last earnings season, I think almost to a tech stock. The first move was the wrong move, but on a 2-day horizon, it was the right move. We were seeing sharp falls and a bounce, and then a dribble all the way back off, or vice versa. It was what people were looking for, or what the algos, the first reaction trading bots were looking for on the earnings calls tended to be, well, I don't know, there was confused messaging.
If it's current numbers are going to go up, and then the call around guidance, could be true.
But to say that over the numbers opportunities, but very difficult to trade. I think it's one of those where you sit back and digest the numbers and then trade rather than trying to take advantage onto the number.
Agreed. Right, so that is us. It's 8:50 a.m. The FTSE has just touched 8,200.
Well, there we go. Look at that chart.
What were people worried about? Hey, what did we get down to? 7.6.
Yeah, I think there was that 400-point fall. It was holding up around the 8,000s, and then
Thursday at 5 p.m. As we say, it's always that 5 p.m. Just as people want to leave the trading floor and go out to the sunshine, they put that final hedge on. That's just it might be the worst night ever. Sell more. Did we get down before?
we'll probably have to go back to before the Wednesday. There we go, 7.6, yeah.
It's 8 a.m. on that Monday morning, that dreaded Monday morning, 7,533. So we're 10%, 9% higher.
Yeah, yeah. And it's also obvious, isn't it? The FTSE was never affected by tariffs at 10%. Although actually with the pharmaceuticals, you know, this is the next bugbear for Trump, isn't it? And
yeah.
Astra and the beleaguered GSK, never good news on GSK.
I did wonder, but did GSK and Astra not just make drugs in America then?
They, I read the numbers this morning, about 22% and 25% each, Glaxo with more than Zeneca. So there's quite a lot of drugs being made in America.
Right.
There. So it's not the worst.
Across there, don't they? Yeah, beyond Bond. It's, yeah, right, 8,200. Good. Okay, FTSE's fine. Matt, thank you as always. Who knows? By the time you're in, it'll be next Tuesday with Angeline's back.
Yeah.
Who knows where we could be?
Quite.
We'll have all had a lot of chocolate in the meantime. Thank you very much for joining us.
Thank you.
And the recollections, we've got some more old stories to go over in the future, I hope as well. But yeah, have a great Easter. We'll see you next week.
Yes, you too.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, look, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal. And I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach. And I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There were too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments like shares, indices, forex, and commodities without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
From the 2nd of April, watch Trade Live with IG weekdays from 7:30 to 10:30 a.m. on our brand new YouTube channel at Trade Live IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and your usual favourites, Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Good morning and welcome back to Trade Live with IG. I'm Emma Binns and Rich and I are going to be having a look at the US openings today.
That's right. We've got about 90 seconds until we ring that opening bell. How was Spain?
Very, very rainy, actually.
Oh no!
I know. I only took summer dresses and it was thunderstorms, but it was really nice to see my family.
Well, that wasn't good planning, was it?
Not really.
Did your grandpa enjoy his birthday?
He did indeed, yeah. There was the whole family there, which was lovely. So yeah, but I'm hoping the weather clears up for you when you go.
That's right, yeah. On the plane, Wednesday. It's so far so good. Got my paddle all booked.
Have you?
All sorted, yeah.
I'm still yet to play, but it's a work in progress.
Yeah, no, definitely worth it. Good, okay, well, glad to have you back in the seat. Now, what have we got coming up at 9:30 today? Give us a little snapshot.
The plan is to have a little look at the hidden costs surrounding reaching net zero by 2050. I feel like we've all been talking about tariffs all over the place, so it might be nice to have a little bit of a break and discuss something else for once.
My goodness. If you had brought something in to talk about tariffs, I'm out.
Yeah, it's taboo.
Yeah, we're trying not to mention his name today.
Right.
So that's the name that is banned on the show.
Mentally noted.
Mini Cooper managed 8 minutes without mentioning it. Right, we've got 15 seconds there. Do you see a bell in front of you somewhere, Emma? No, is it missing?
Is that this one?
Ah, that one, yeah. So
Yeah.
give that a ring in about 3 seconds' time, and that will be you opening the New York Stock Exchange. Oh, you'll have to hold it up on camera as well. There we go. Perfect. Oh, there seems to be a delay in the camera this morning. Right, we are off and running then. Let's see what the leader is on the US moves.
So we've got Netflix at the top with a change of 2.3%. And yeah, 3M Co is up 1.47, Wells Fargo 1.08. And then we've got Palantir Tech, Nike, about 1%-ish, both of those. Berkshire Hathaway, 0.6, United Health Group, 0.7, and then all the way down to Disney is 0.4. Yeah, there's quite a few up at the top there. Netflix is looking pretty good.
Yeah, nothing. So what about the moves down there?
So Boeing has changed minus 1.6, American Airlines 0.8, General Electric Co 0.45. Let's have a look at some others down there at the bottom. Johnson & Johnson up 0.04. Yeah, Visa and Caterpillar both down about 0.4 as well.
And that is ahead of Johnson & Johnson numbers today, remember. So 154. We had a couple of price targets there around the 180 mark. But let's see what boring old Johnson & Johnson. You contact lens wearer?
I'm afraid I'm not, no. I'm still reveling in youth eyesight.
Youth eyesight. Yeah. Bit of a dig. I'll take that one. Waiting for my next 3 months supply from Johnson & Johnson to pop through the door today. But then I realised that I ordered the 3 month pack was cheaper than getting 3 1 month packs.
Right.
But I completely forgot that the 3 month pack doesn't fit through the letterbox.
Oh,
so
no.
That's going to go horribly
So you might
wrong,
have no eyesight for a couple of days.
Yeah, that's fine. Right. So Netflix. Now, I guess, you know, you being a student at university, dodging your TV license, what are your subscriptions like? What are your sort of viewing habits?
I steal somebody else's Sky Go subscription, and Netflix, I'm sort of jumping between my families and my neighbours. I'm yet to buy my own subscription.
Does your neighbour know that, or is it just
I think so. Yeah, so also, I mean, I'm in a family of 5, so we all tend to share one. And if somebody else is using the TV at the same time, you get a little notification popping up saying somebody else is watching a show. So you've got to text the family chat saying, get off.
All right. Oh, brilliant. Yeah. I need to watch this for study reasons.
Yeah, exactly.
Okay, good. So yeah, Netflix, but no Disney?
No, slightly past that age, I think.
We were just talking about a company called Enron before, and it just hit me in the break there that this was before you were born. So Enron was a kind of big energy trading company, and it was probably the biggest blow up of all time, but it was December 2001.
I was going to say I haven't heard of it, so that makes sense.
So Matt brought up there's a good program, The Smartest Guys in the Room, or something like that, the smartest men in the room. So yeah, it's well worth a watch, because these things do tend to happen again and again. So did you watch the Katy Perry into space yesterday?
I'm afraid I didn't. No.
It's an interesting one. Have a watch. But yeah, we're not really seeing. Boeing is taking a bit of a hit. Now showing down 3. That's despite a wide spread, but not too much going on. So let's catch up on our FX and commodities. Emma, do you want to take us through the pairs there for the FX team?
Yeah, so GBP and USD has changed about 0.3%. The euro and the dollar is about 0.156. The dollar and the Japanese yen is 0.06.
I can't believe euro dollar is back 113.70. Did you? How did prices feel down in Spain? Because you're getting 116 at the moment.
Remarkably cheaper, I'd say. A glass of wine was a lot cheaper than it is in Bristol. So.
Oh, really?
Yeah, Bristol seems to be the second most expensive city to London, so it's quite a nice break going to Spain.
I didn't know that. That's very interesting. But yeah, here we see, so the value of the pound to the euro has dropped recently from 120 to 116. So those glasses of wine still a little bit more expensive than they were recently, but in the grand scheme of things, then we are, sort of much of muchness as we were this level back in 2023 even. So yeah, not too bad there. It's more against the dollar crosses. And then what about in commodity world? There we go.
So at the top there, we've got oil. So US crude oil has changed about 0.17%. Brent crude is 0.18, so similar. Gold is 0.48, and we've got silver
Right
on minus 0.1.
Right at those all-time highs in gold.
Yeah, I'm happy I put some money in a while ago, but I'm not sure when to need to be ready to take it out again.
Yeah, it's the really tough call. I'm now out. I'm completely out.
Are you?
But from like 3,150, so I'm already, it was already too early. I don't know. I don't know. It's really tough to see how they get these budget deficits back under control and the overall debt issue. So maybe I was a bit early there, or into Bitcoin.
Yeah, I don't know. It's a tough one. I think I try to slightly hedge my bets and put some in the price of gold and some in gold mining companies as they slightly fluctuate. But I'm holding out still at the moment, hoping for a long-term thing.
Well, when you come along to the Tom Sosnoff visit in June, I'm sure Andrew McKelvey will be there. He will tell you about a gold mining company. Do not worry. Greatland Gold, GGP. I'm sure Andrew will tell you. But have you all registered? That is the question. Let me get up our invite to bring you along. Oh, it's on the wrong computer, isn't it? Of course. That's right. Tom Sosnoff is back, and they've called it Back for More. So it is Soz, Bat, and myself are going to be on stage down in N16, which is Hackney Evolution Arts Centre, and it's on Friday, June the 20th. Come along, it's going to be a lot of fun. And here we go. Here's the tastiest pop-up event of the decade. After 14 years together, trading legends Tom Sosnoff and Tony Batista hit the road together for their first live triple witching, right? It is June expiry, and we are going to be trading live on stage. This is a big one. It's fun, challenging, silly, and very fast-paced. So silly could be described as last time as my trading mistakes, I think. Twice he told me to buy, and I sold by mistake.
Oh, no.
I blame the system. So that's right. So we want you to register for this event. Registration is free. So Emma and her friends at Bristol will be happy all about that. Wouldn't charge a student, but we're not even going to charge the OAPs out there either, nor the adults. So the link is in the chat there. That's the Tasty Live comes Back for More to London. If you're in Milan, we're also off to Milan on the Monday, if you'd rather come along to the Milan event. I think you'll be busy at that time in a certain placement in a bank in London somewhere, won't you?
Potentially, yeah.
So we've got FAQs down at the bottom there as well. You get all the details on the venue location. Will beverages be provided? Water, coffee, tea, beer and wine. Now, This is how I get out of my promise of last week of buying you all a drink. If you come along, not only will your beer and wine first drink be free, I will put my car behind the bar for the rest of them as well.
Might have to rearrange some plans to attend.
Yeah.
Now that you've mentioned that.
Get all your student mates along. Go on. Good stuff. Right. Quick check back then, because the FTSE is the index that is really benefiting this morning. We've got the FTSE currently up 88 basis points. This continued recovery. So Emma, take us through what our best performers are in the UK world.
Sure. So we've got Halfords Group right at the top with a change of 12%. That's pretty good. Ocado, 3.36. Do you ever shop at Ocado?
It's funny. We had a bond expert on yesterday, and Reza was explaining to me that Ocado, you could have shorted the equity, and it's down 20% this year over the last 12 months. And you could have been long the bonds and you would have made 10%.
Right, I see.
Which I hadn't understood, that there was that sort of pair available. Ocado, I get my Amazon delivery actually.
Do you really?
Brilliant, because I'm one of these awful people that orders bottles of water still. And they carry them up the stairs for me.
Do they really?
Yeah.
That's hilarious.
So it doesn't tie into our net zero discussion later, really, does it? St James's Place up to, Bellway up to, BAE up to, Tesco's. That's right. Great bounce there from these stocks that are hopefully tariff proof. And the UK of Bellway, St James's Place, Barrett Redrow, Land Securities strong as well. And don't mention the fifth one down. Don't mention that it's doing well. At the £10 level.
The elephant in the room.
Right.
And then we've got Hammerson at 1.57, Schroders 1.67, and what's that, Lloyd's and Playtech about 1.45. Legal & General's 1.3 today, and what's that near the bottom? Entain is 1.1.
Good. And then EasyJet, there we go. That's I'll be frequenting that cabin tomorrow. I think it's great. Who did you fly with?
I flew with British Airways.
Oh, of course you did.
Yeah.
Interesting. Yeah. Did you turn left or turn right?
Do you know, I still don't know my left and right, so I couldn't answer that. I have to do this.
Fantastic. We've found a chink in her armour, people. Not only is she president to be of the Bristol Trading Society and a yogi, and about to start off an exciting banking career, she's yet to learn her left from her right.
It's a work in progress.
Good stuff. Right, we're going to have Aaron Bright come in, and we're going to let the young ones have a discussion for about 15, 20 minutes. And then I'll be back, and we're going to talk all about the hidden costs. Well, you introduce your segment. Go on.
So we're going to have a big old chat about the hidden costs surrounding reaching net zero by 2050. So stay tuned for that.
See you after.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose. From the 2nd of April, watch Trade Live with IG weekdays from 7:30 to 10:30 a.m. on our brand new YouTube channel at Trade Live IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and your usual favourites, Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, look, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal, and I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach, and I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There were too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Hi, welcome back. It's Aaron Bright, Assistant Portfolio Manager of the Smart Portfolios, and I'm joined again by Emma from Bristol Trading Society. So just before we came to break, we were chatting a little bit about our experience of investing in our 20s, because obviously Rich isn't in his 20s. So yeah, we're keen to have a chat about that. So I'm keen to understand a little bit about your investing experience, your investing time horizons, and all a little bit around that. So feel free to go ahead and share.
Yeah, sure. So I was slightly premature in getting involved in investing. I think when I turned 16, I asked my dad if I can open up a junior ISA.
Okay, that's still pretty early though, 16. I think that's,
yeah,
you know.
Yeah, fairly early, which hopefully will bode well. And yeah, I did simple. I think I invested in the Legal and General Technology Trust or Fund, which did really, really well.
That's pretty smart as a 16-year-old. I don't think at 16 I was just, you know, starting my economics journey and thinking. Yeah. You know, but maybe I like going into finance, but I don't understand any of this yet. So that's pretty impressive.
Well, I just thought it was interesting. And yeah, so I think from that, it was obviously COVID, which was a complete
So would you say that's what made you get into it? Was the COVID, all the volatility around that?
Yeah, I think I just had too much time to be reading and watching YouTube videos and all of that. So I thought, I might get my hands dirty in this. And yeah, from there, I sort of diversified a little bit. And then I think when I turned 18, opened a pension very prematurely. And yeah, and also a LISA, a lifetime ISA, which is great. And as I've got further and further down, I've just slightly diversified. I always try and tweak with them a little bit, but not very experienced in the whole short-term trading, much more long-term, would rather just leave it in there, let it do its thing and take it out when I actually need the money.
Yeah, no, that's really, 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 really interesting, to be fair. And why do you think it's important to get into the markets when you're young? Because I think I was probably dabbling a bit at uni, not really understanding too much about portfolio construction until I really got into the world of work. And because, at uni, you're sort of focused on other things. Then I sort of got into it. But why would you say as a young investor it's really good to get into it?
Say 2 words: compound interest. The money that you put in now is worth so much more than what you put in when you're 50. I think it's better just getting young, and even if you don't really know what you're doing, there's so much information out there that I think can really, really help. It's just a good thing to be interested in. But yeah, so when did you start sort of dipping your toes in the water of investing?
So I think at university I was, investing in mutual funds, S&P. There was a Bailey Gifford fund, which was a multi-asset fund where they sort of, it's multi-asset, but it's like 80% equity. The rest is bonds, but they gear their equity really highly towards tech. So so I rode that upside and downside quite badly come 2022. So
I'm sure
that was my sort of first experience of investing in. But I started, my first job was September 2019, just after I finished university. Was sort of seeing the tail end of this huge bull market we'd had for the past decade, and then come March, I remember I had a very distinct memory. I got to the office about 7:30 that day because there was a lot of volatility going on. I was like, okay, need to get to the office early. Went to Tesco's, crossed the road, looked at my phone, and I saw the FTSE was down like 10% in like 5 minutes, and I was like,
no.
What a great start to 6 months in a job. And I was getting calls from clients being like, why have I lost X amount of money? And I'm like, well, this is all part and parcel. You have to keep your nerve. But it's a really good. I found that to be a really good sort of learning curve. And I was actually saying to my boss just now, this is my third market crash in about 6-7 years of investing. So it's a really nice learning curve. So how would you say you found this sort of market crash we've had over the past sort of few weeks or month?
Do you know, it's been interesting. I don't have any short-term trades on. I'm only sort of long-term. So initially I thought, oh my gosh, I could see all of the numbers going down.
It is depressing when you see it.
It is, especially when I've been on the upside for since I was 17 or whatever. But my overall mindset is that, you know what, I'm not going to really be using this money till I'm much older. So I'm just going to ride it out, and it doesn't really matter.
Exactly. And if you were going to use that money, then you probably wouldn't have put it in the stock market. You would have put it in a cash account, or in a sort of really balanced or lower risk mutual fund or ETF.
100%, yeah. I religiously don't take anything out of it because, as a uni student, it's really easy to just tap, tap, tap. I'm sure you know.
Of course,
so, as soon as it goes in, I leave it in. But it sounds like you have much more experience managing market volatility. Any advice you would give to approaching that kind of thing?
Yeah, the best advice I ever got from all the market crashes I've seen, I'm sounding like I'm Warren Buffett here, I'm not, but was basically don't do anything knee-jerk. So obviously we saw the market crash. We saw, I've got shares in some of the big FTSE names which fell, like Shell, Rolls-Royce, those sort of names. And you see them falling at the beginning of the week, sort of 8-9%.
Yeah.
And it is so tempting to just liquidate your position, even from sort of the attitude of a professional investor. You're thinking, I need to cut these losses. I don't want to see it go down more. But you have to, as long as it aligns with your risk appetite and you see a good potential for that company, you were rewarded the next day when the tariff reprieve came. So
yeah, exactly.
It just shows that if you miss those good days, those recovery days, just because your sort of bad psychology gets the better of you, you can be punished quite badly. So that's, I think, the best bit of advice I'd give is just to understand that it's quite a healthy part of investing, even though it seems horrifically unhealthy when you see markets crashing.
Yeah, so basically just don't freak out and hold in there.
So we've got a poll on the screen. Thank you, producer Phil, putting this poll up. What age did you get into investing? So I think we're both in the 16 to 21 bracket, but I'm intrigued to see where some of our viewers, our trader friends, as Ange calls you guys, where when you guys started investing. But yes, so what do you, I mean, what's at Bristol when you're chatting about this thing, what's your view and your friend's view and the Trading Society's view on how things are going? Is everyone sort of quite nervous on markets, or are they sort of looking for that long term and they're not too worried about this short term noise?
Do you know, it's a funny one. I think some people are sort of, you know, they live and breathe trading. And, you know, one of my friends who is great, he's a full-time forex trader. Wow. Every lecture he's trading, you know, he doesn't really do anything else. And
does he have one of these TikTok pages, the Lamborghini, yet?
Not yet, but maybe wait a couple months. And yeah, so I think for the people who are in short-term trades, it really has been a bit wild. But I think for most uni students, not everybody really has the disposable income to put into the stock market. So, you know, I've been trying to convince my housemates to set up ISAs and just sit them down and say, just sit down for half an hour, set this up, and just, you know, I think I have it so it's automatically coming out my account every month, so you don't even see it go. And I really think that's the best way to do it. And it doesn't, especially if you're long term, it doesn't really matter too much everything that's going on now, because it's so far in the future that you're going to be taking it out.
Yeah, I'd reiterate that. I mean, as I said earlier, it's really all about those time horizons. And if you're looking to buy a house, let's say, and you've got 6 months, I mean, it's not very sensible to be buying US equities or stocks or REITs or any sort of volatile asset. Even gold can be quite volatile. I mean, do you ever touch on gold investing? Because I remember Rich just saying earlier that he'd liquidated his position.
Yeah, so I went to, I think it was last year, I went to a talk about behavioural finance, and it was sort of geared at young people. And the guy who was talking said, you know, invest in gold, invest in gold. So I went home and I thought, okay, I'll do a bit of research. And I have a little bit in the price of gold and a little bit in gold mining companies, because they're slightly different. And, you know,
they are,
different production costs.
I've invested in both professionally. And when gold is doing well, like it is at the moment, because you've got the leverage factor with these mining companies and their margins just expand, the share price of these miners just flies. I started investing in gold miners professionally because we couldn't access a physical gold product on our platforms with our previous model portfolio system. So I caught the downside basically with leverage. So it was a pretty horrific position. At the moment, it's been wonderful. I've been a huge advocate of gold, even though I'm sort of a multi-asset investor. I like stocks, I like bonds. They've got underlying cash flows, you know the valuations. Gold, it's got this diversification factor.
Yeah, it's great. There's so much that you can do with it. But I think it's important to know when to come out of it as well. So I'm still holding out, but Rich was saying he's completely out at the moment. So I think I need to keep an eye on the market. And are you in, you said you're in gold as well?
Yeah, we've got a position in our portfolios, and I have some sort of in my own products. No, it's good. I mean, gold isn't one of these sort of assets which has huge sort of growth factor to it, like a stock, I'd say, because you've got the earnings, the dividends, all that kind of thing, and the growth of a company, but it's got that diversification factor. I just want to caveat slightly, bond investing. Have you touched upon that? Because I hadn't at your age, but I'm keen to see if maybe a 21-year-old has.
I actually haven't, I'm afraid to say. I still feel very new to a lot of the jargon about, so I tend to just do ETFs and mutual funds. And yeah, I haven't really touched bonds yet, but I get the impression, I don't know if they're that safe.
They are safer than equities, but they're not as safe. Okay. I mean, they are safer, not as safe as cash, though, I was going to say.
Yes, yeah, of course.
Yeah. So, but good news is we do have a beginner's guide for bonds incoming on our YouTube channel. So I've just been told by producer Phil that that's coming out soon. So that's exciting, and posted today, actually. Later today. So
I will be keeping an eye out for that then.
Yeah, I mean, to be fair, I hadn't invested in bonds professionally or just on my own when I was in my 20s. But as a portfolio and in the smart portfolios, really good to add that diversity, because usually they're not super correlated with equities. So apart from 2022, where we had this sort of, I call it a market crash, but it was more of a slide. The whole year it was just going downwards because of all the interest rates going up. That year, bonds and equities both sold off. But during COVID, for example, you had treasury yields plummet. So the bonds were going up in price, equities were falling. So they were offsetting some of our losses. So that's why I love multi-asset investing. You've got loads of different moving parts. So it's impossible to get bored, and you've got loads of different things.
Yeah. There's lots of different I guess, options as well. If one thing goes down, you've always got something else to fall back on.
Hopefully,
So,
hopefully.
yeah.
Sometimes you do see months where it's just red everywhere, but
Yeah.
all green everywhere, so it can work both ways. But
And
exactly.
that's when you hold on.
yeah. The poll is up. The results are in. Would you like to announce the results for us there on that screen?
Yeah, sure. So it looks like the majority of people got into investing at the age of 22 to 30, 40%. And then we've got 16 to 21 is 27%. That's more than I thought. There's a lot of people getting on quite young, but I guess our watchers of this show must all be very switched on with all of that stuff.
Yeah, I mean, it kind of makes some sense to me because you start earning, you start your first job at 21, 22, you get a little bit more disposable income, so that makes sense to me. But no, really, really good. And obviously, as you said, the younger you start investing, the more it compounds. Anyway, that's all we have time for this segment. Thank you very much. It's been great having you on.
It's been great to have a chat.
See you after the break.
From the 2nd of April, watch Trade Live with IG weekdays from 7:30 to 10:30 a.m. on our brand new YouTube channel at Trade Live IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and your usual favourites, Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them.
You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello and welcome back to Trade Live with IG. I'm Emma Binns and Rich and I are going to be talking a little bit about the hidden costs surrounding reaching net zero. Obviously a very important goal, but yeah, we're going to have a little bit of a discussion breaking down the quite hefty price tag of actually following through with it. So Rich, do you happen to own an electric vehicle by any chance, or solar panels?
I've definitely considered solar panels. When I moved down to South Africa, even on the sort of poorer areas in South Africa, which of course there are a lot in the townships, they've got solar panels on the roofs.
Have they?
Which was just such a great idea to remove all the electricity bills. But I don't have any car. But if I was going to, the next one could at least be a hybrid, yeah.
Interesting, yeah. So, and do you reckon they're a bit expensive, or what's your kind of thoughts on it?
Feels like it to me, yeah.
Yeah, I get that impression. I think transitioning to net zero as a kind of 2050 goal, it seems like there's going to be a lot of high initial capital investment, which a lot of which is probably going to be passed on to the consumer. Green technology is not cheap, and I really sort of feel the public have been sold a bit of a lie that it is going to be cheap. Amidst the cost of living crisis, I'm sure if you ask the average household, would you rather get an electric vehicle, solar panels, or put food on the table? I think the answer would be the latter. Yeah.
And it's significant, isn't it? It's like £20,000, £30,000 to get solar panels on the roof, and you're only getting a small benefit each month. So it's taking 5-6 years at least to just get your capital back.
Yeah, it seems like it could, at least for the time being, be quite a luxury good, so slightly unattainable. So that's a bit of a worry. But moving on to, I think it'd be really interesting to watch our relationship develop with China. Because they are obviously global leaders in renewable energy.
Right, I didn't know that.
Yeah, they are. It's fascinating. I think they produce almost 50% of solar power energy. This is crazy, 97% of silicon wafer production comes from China. They're also global leaders in battery production and natural earth, rare earth mineral processing, which is about 85 to 100%, all comes from China. So as the UK, we are hugely dependent on them. And I hate to bring the taboo word up, but tariffs against China, the rest of the world also is very dependent on them. So it'd be really interesting to see how that relationship develops over the years, and how we can in turn also keep reaching net zero.
It's funny because a lot of, 2008, the Olympics were in Beijing, for example, right? And ever since then, the press has really pushed this idea that China is all polluting, and it's got a worse grey mist over it than London does in terms of the air quality. But it sounds like they've made a big push.
Yeah, well, I'm not sure if they are actually using that renewable energy or just selling it.
Right.
I think there's a bit of a mixture. It sounds like they've made a big push in producing and selling all of the renewable infrastructure that we need. But if you take a look at the first graph, if you just scroll down slightly,
Okay.
I was having a look at the issue of stranded assets, which is a huge hidden cost in reaching net zero. And yeah, with China, I mean, there's going to be a huge write-down of fossil fuel assets, which is going to reduce earnings and investor confidence. And maybe you could take us through the graph on the left, with China as one of the biggest ones that's going to be affected.
Yeah, and what do they mean by stranded assets then?
So it's assets that are going to be kind of put to one side because people are no longer going to want to invest in them or use them. So as people shift towards green production and green energy, there's going to be a lot of fossil fuels in particular, which China uses, and hence their big pollution sort of card in the game. Which people are no longer going to be buying. If we really are trying to make this switch to net zero, you know, if laws come into place with regulatory compliance and all of those things. So I thought that was quite interesting to show the sort of share of stranded assets and who's going to be affected.
Yeah, definitely. And you know, the developing world, especially.
I mean, with bringing it back to actual trading, there's certain stocks that are definitely going to be affected. I don't know if you're invested in Shell, BP, or ExxonMobil.
There's been the 2018-19, I guess. Suddenly, you know, these guys were treated like criminals for daring to increase production in fossil fuels.
Yeah, no, it's going to be an interesting one to watch, and particularly the share price, as if we really are serious about reaching net zero, this is going to happen. You know, you need to be watching the price of these things. So, yeah, I think if we move on to the second graph, was quite interesting.
Wow.
Yeah, so maybe do you want to take us through that? That's showing us the sort of difference between lower GDP per capita countries and fossil fuel resource producers, and how that's going to impact climate change, basically.
Right. So let me see now. So the size of the circle is obviously the population in millions.
Yeah.
And then the color is the physical risk, with significantly hotter and more humid. India being the most at risk there. With United States actually is a diverse climate. Got it.
Yeah.
And then obviously Europe, you know, relatively so as well. But yeah, up towards Kenya, Pakistan, Bangladesh, Nigeria, India, we're seeing, you know, big countries with significantly hotter and more humid risks.
Yeah, so those are the ones that have a much higher transition exposure, talking about the green transition. So it seems to be a lot of those developing countries are going to find it a lot harder to shift over to green energy, which makes sense. You know, and let alone the UK as well. You know, we're not as potentially rich as we used to be, and it's not going to be cheap. It's got a quite hefty price tag, I think.
At a time when government deficits are very much under the microscope. And I guess that's what we're seeing. Is there almost countries are admitting we can't afford it, and therefore these, you know, the net zero talk is getting pushed back, or it's getting diluted?
I think that is a bit of a case. I mean, it obviously depends who you talk to, but, you know, it wasn't so long ago that it was net zero 2030.
Yeah.
And suddenly that's been pushed back 20 years.
Wow.
Is that because we haven't done enough, or is it because people don't think we can possibly do enough in that time? It's probably a mixture.
And what's the feeling, you know, people your age group nowadays, is there a lot of discussion is around the kind of mess that, you know, older generations, I'm not taking blame here, but yeah, older generations have left you with this mess. Is there anxiety and worry about that, you know, you're about to see big weather events during the short term, the medium term, the longer term?
I think climate is definitely a big topic of discussion amongst young people. I don't personally think it's the older generation's fault necessarily. You know, there was the Industrial Revolution. I don't think all old people just hate recycling or something. I think it's just, you know, we all do what we can do, and we've got ourselves in this situation. But I think people definitely, especially young people at uni, definitely care about climate change. It's important. But I think there's less of a discussion surrounding the costs of it. I think there's kind of this impression that, I don't know why, but that recycling and green energy is cheap, and it's just not. You know, it's and also not necessarily as convenient. You know, buying a car is easier than, or you know, easier to get around and quicker than getting the bus or walking. As much as we'd all love to be the ones walking to work and things, it's a really hard play up, especially amidst the cost of living crisis.
So, what's the view of somebody like Greta then?
You'd have to ask her.
No, I mean, what is your age group's view of somebody like Greta?
Oh, fine.
You know, how is she seen?
Quite controversial. I think there's, you know, some diehard Greta fans, and I think other people are less keen on her. You know, her message is obviously important, but I think there definitely needs to be a lot more talk around the reality of hard-hitting prices. At the end of the day, people are going to have to pay for this, and there needs to be serious planning and understanding about how much it's going to cost. You know, it's not just as simple as saying, oh yeah, let's all reach net zero by tomorrow. And, you know, that has a cost. You know, there's a lot of things that we take for advantage today that potentially we won't be able to have if we do reach net zero. And that's fine if that's an important goal. But yeah, I think there needs to be a lot more open discussion about the costs surrounding it.
It's interesting because there has been a move. For example, you and I were talking about pensions earlier, right?
Yes.
Now, somebody like a pension bee. This is if you've worked in various companies, and you've got pensions from 4 or 5 different pension providers. You can consolidate them into one, but then they offer this climate fund or a fund that allows you to invest in companies that are very carbon focused, and that, should it sway people's investment decisions? Because of course the whole idea behind investment is moving capital towards a company that is responsible, to give them more chance to use it, and perhaps punishing ones that don't.
It's an interesting one. I think whilst it's important, I think at the end of the day, a lot of people just want to make money. You and me both want our stock prices to go up, right? And if there's a company that is slightly more environmentally conscious than another, but it's making a lot more money, I think I would go with that one.
Right.
At least personally. Other people I'm sure are different. I don't know if you saw recently, but I've forgotten the name of it, but there's a fund that's been created which excludes all ESG. It'd be really interesting to watch how that grows and whether or not it's going to outperform others. Maybe it won't, but obviously there's ethical concerns behind it too, but it's going to be really interesting, I think, to watch develop. And I guess in the grander scheme of things, the final graph we've got on there shows the impact of emissions compared to the rest of the world. I think altogether, the UK is something like less than 1% of carbon emissions for the whole world. At least it's minuscule. China is a huge player in it.
Yeah.
So maybe the question we should be asking is, obviously it's quite difficult to manage, but our reliance on China, rather than reducing our, sort of achieving net zero by relying on China's imports, should we instead be asking how are we going to change what China's doing? How are we going to manage that relationship? And that's a very big fish to fry, but really, really interesting discussion about our overall impact it's even going to make.
Most definitely. Oh, so in some ways, you could say that Trump tariffs are saving the world.
You could, yeah. Potentially.
And that's exactly what he's trying to do.
Yeah,
he's just trying to, and maybe Putin was as well. Maybe Putin was trying to stop people using gas.
I'm sure.
In Europe. Good stuff. Right, well, I would like to take a look at, how long have we got? Yeah, we've got plenty of time. Carbon. Did you know that you can actually trade carbon? This is something, let me try and get this up on the platform. So here we go, carbon emissions, and maybe Crane shares one might be. Let's have a look at the futures first. So this is something that came into play, I guess, like 2016-ish. Yeah, these are just the futures. So sorry, let me get up this this Crane shares ones. That's better to show you over the longer term. Now, this is a system that, this only also goes back. Sorry, guys, trying to find one that goes back over a much longer term.
There's so many.
That we can show you. No, why is that happening? Carbon, global carbon strategy. I wonder if that's it. Yeah, that's 2020. So the idea of trading carbon came into play. Yeah, probably around 2015-16, I think. We started seeing it tradable in 2018. And what is happening basically is that you've got like a voucher system, right? And if you're polluting, then you need to buy vouchers to give you the right to continue to pollute and using carbon. So you saw the coal example of coal, stranded coal reserves. You can still use that coal, but you have to pay per kilogram of carbon with a voucher. Now, companies like SSE, chart off, thanks guys. Companies like SSE that are hydro, that are wind, right? They can sell their vouchers to a company like Drax that uses, coal plants. And this was throughout Europe, and it looked incredible until we got to COVID. And then suddenly COVID, the value of it is nothing because nobody's making anything. They're all sitting at home watching television. So they had to put in some emergency measures. They had to, to stop the system falling apart. So now we're getting to a part where it kind of becomes a bit normal again in the next few months. And it'll be really interesting because it has come down significantly. And I'll try and find a proper graph for you for tomorrow. But yeah.
That's interesting. I didn't know you could even trade carbon. That's fascinating.
Carbon credits.
Right,
yeah.
okay, carbon credits. Okay.
So you are, and it was a European directive first of all, and they put into place that the more supply of something, then the more pressure on the price downwards. So they release these carbon credits every year at a lesser number of supply, a little bit like Bitcoin, with how Bitcoin supply comes lower and lower. Carbon credits are similar. Now that had to change because of the problems of recovery from COVID. But now, yeah, you get back to an interesting.
Yeah, that's fascinating. Yeah, it was great to see in COVID. I mean, I guess because nobody was moving around using their cars. You saw reports of things like the canals in Venice were suddenly clear.
That's it.
And, wildlife were coming back to life. So it was great. And it was almost amazing how quickly things changed and how quickly it was sort of getting back on track.
Yeah.
So yeah, that's really interesting. I didn't know that.
We so I was in Queenstown, New Zealand at the time, and there was no aeroplanes, obviously, flying for a good 3 weeks to a month, and birds returned to the area that hadn't been there for a long time.
Yes, yeah, I remember seeing that because my dad's a pilot and he literally was obviously out of a job for ages, twiddling his thumbs at home. But but it, on the contrary, it was great to see the rest of the world just suddenly blooming again.
Yeah,
it's amazing how quickly that happened.
So and that that's taken things to the extreme, right? We don't have a pollution problem if we crash the economy and we all sit at home. So where is how do we get to net zero with the extreme of doing nothing like was done in the 80s to to fully closing all industry?
Yeah, so I mean, it's a big question. I mean, it's going to be really hard to find a balance, I think, between reaching net zero at a time that we need to, doing it at an affordable price, and when it's actually going to make a difference. It's going to be really interesting to see how geopolitics plays out and how different countries' relationships are going to end up affecting it.
Good. Thank you very much for that. We'll go to the chat and see what we've got going on there. So Steve Davies saying he used to take aluminium foil to school, got no idea what they did with it, but hopefully it went to good use. So he was recycling in the mid to late 60s. Steve Davies, I never knew you were as old as that. Mid to late 60s, wow. And Andrew McKelvey's saying, yeah, Professor Dieter Helm of Oxford Uni has written many books and papers explaining why net zero will not happen. So
interesting.
Yeah, that's always really interesting if somebody, of Oxford Uni, the likes of that, is saying no.
Yeah.
Whether we can afford net zero is almost academic in the UK. We don't have the skilled labour to rewire the network, even if we could afford it. National Grid, they've got a real tricky few years coming up. Of really, the amount of work that it takes to get the energy from a wind farm in the North Sea to actually areas of the country that need to use the energy.
Yeah. So there's a lot to it that I think doesn't meet the eye initially. It's definitely should be talked more about in unis as well. I think, the extra costs surrounding it, and not just the sort of we need climate change, which is obviously really important, but it's a lot more discussion needed around it, I think.
Yeah. Steve Davies seen Emma having her own show one day. Interesting.
Potentially, you can come on as a guest.
Look at the laugh. I think that's funny. Right. Monkey Man saying, I recall energy prices typically going up around 7% a year. Show him a savings account that does the same. That's very true. But also in your last conversation with Aaron, I did notice comments coming in about the first investments that people ever made. So yours was the Legal and General Tech Fund.
Yes, it was.
And Steve Davies was British Gas. And I noticed somebody else, away from the numbers, saying Pizza Express shares. That was an interesting one. One was Electronics Boutique, which is now where, it's called Game now, I think, where people buy their computer games. And then I thought it would be of interest to show you an old school share certificate. So this is what you used to get when you would buy shares. That's one in Guinness.
Gosh, that looks ancient.
Yes, I think that's from 1991.
Wow, okay.
Yeah. So.
And it's got your name on. Oh, interesting. Yeah, fascinating. I don't think I'll be getting one of those.
But it was, you literally had to, so you would be sent that from the company registrar, and you kept it. So you had, 10 share certificates or whatever sitting at home. And then if you sold them, you'd phone up your stockbroker, sell them, but then you'd have to send off the certificate.
Right, almost like a check, kind of. That's interesting.
You say check as if it's one of those check things.
Yeah. Yeah, like used to get Christmases ago.
Yeah.
Yeah, that's really interesting.
Brilliant. Bigger Biaz, there we go. That's more Monsanto. So I'm guessing that was about 2007 Bigger Biaz. Was that right? That is my guess, that your first investments were around 2006, 2007, because that was when Monsanto was the thing to get into. It was the Nvidia of the day, and how that has fallen from grace now with Bayer being brought to their knees over it. Right, should people subscribe and like the YouTube?
I would say so, yeah. Depends how much you like Rich, so.
Give us the big thumbs up. We're not going to have that as the poll of the day. Should we invite Emma back? That can be a poll of the day.
Fingers crossed.
So yeah, Bigger Biaz. Oh, I apologise. 1996. That was 1998 was when I bought Electronics Boutique, but I was given SSE shares for my 16th birthday in my father's name, and then having me under written underneath. Andrew McKelvey's first investment, Gleason Homes, GLE. God, some names coming back. My father had Rustenburg, which was an African mining company, or had mines in Africa. What else did we used to have? There was a football fund. I can't remember if it was Fidelity, but it was a fund that would invest in, Man United. Any share that was listed, it would have a bit. It was a disaster. I remember checking the Financial Times, £1.20 down to £1.10, 90 pence.
Just went down and down.
Yeah.
Oh, interesting.
Monkey Man asking, are you hosting Thursday's show, Emma?
I wish. Potentially tomorrow, though.
We'll invite her back tomorrow. There you go. Or she just invited herself back tomorrow. Right, everybody. Thank you so much for joining us this morning. That's been a great one. Let's take a really quick look at what is the top of the leaderboard before we go. Where's all our favorite names going into this beautiful Tuesday? We are Ocado up 4, British Land up 3, Anglo-American up 2.5, Rolls-Royce up 2.5. Finish it off there, Emma.
Yes, we got Kingfisher up 2.5 as well. Bay Systems 2.1. Entain, what's that? 1.95. We got Barrett Redrow up 2%. Schroders up 1.9 about. Same as JD Sports and Vistry Group. Trainline's down there at up 1.6, and yeah,
quite a nice bounce overall, isn't it? Good stuff. Right, excellent. Plans for the rest of the day?
I've got a driving lesson actually. I bet that will make you feel old.
I was about to say beware on the streets of London today. But you got in there first. Well done. We'll see you tomorrow. Thanks for joining us. Have a great day.